Hi, I'm Jonathan. The battle between Lordstown Motors and Rivian, the battle between electric vehicle manufacturers, has been raging for a while. Oh, they're not battling? What? They aren't even fighting? How did I get it all wrong? On this channel, I bring context to the market and investing. With this in mind, I want to talk clans and communities. Sorry, that is incorrect. I want to talk about pre-revenue electric vehicle manufacturers Rivian and Lordstown Motors. Rivian and Lordstown Motors are both startups, or very recently in the startup phase. They are both pure play electric vehicle manufacturers, meaning they've never and will never produce internal combustion engines or internal combustion vehicles. Additionally, Lordstown and Rivian are starting in the pickup spaces, as opposed to the car space where Tesla started. Both companies have received support and or financial assistance from incumbent ICE manufacturers, such as when GM supported Lordstown and when Ford supported Rivian. There are significant similarities between the two companies. However, there are three differences that you need to know about. Fortunately, I've been traveling this past week. Unfortunately, that means I'm not able to get any solid footage. That means this video will be a little light on talking head footage. Public company versus private company. Lordstown Motors is a public company. They went public in 2020 through a reverse merger with a SPAC, a special purpose acquisition company. This means Lordstown and their board and management answer to their shareholders. Lordstown must report earnings every quarter and publish audited financials at the end of each fiscal year. This requires time, effort, and attention while costing money. Rivian is still a private company. They are not yet listed on the exchange. Rivian has several investors who are already public, but they themselves have not gone public. They have remained private, even though talk is swirling that they will go public soon. This means Rivian probably has audited financial statements because investors want them. Rivian does not have to have quarterly earnings releases and does not have to publish financial statements yearly. The significant benefits of being a private company are timeline flexibility and not having to publish losses. Without the burden of quarterly earnings, management and the board can focus on longer-term topics with less concern for the short-term effect. Additionally, Rivian does not need to tell the market every quarter how much money they are losing. The significant benefit of being a public company is being able to go to the stock market for financing. This is just not possible until companies go public. The difference. Company age. Lordstown Motors was founded in 2018 by Steve Burns, the former CEO of Workhorse Group. Therefore, the company is still fairly young in comparison to many public companies. Rivian was founded in 2009 by this guy, RJ, an engineer by trade. Rivian is already over a decade old and has been through several investment rounds. At the time of this recording, rumors abound about Rivian going public soon, but there is no published date. We don't know when to expect this. So what, you ask? Why does it matter how old a company is? Younger companies are more volatile, which means there are more unknowns, and the market hates unknowns. As a company ages and progresses, it will gain the abilities and processes to build consistency and deliver to the market expectations. This consistency and maturity look better to the market. Additionally, pre-public investors, such as private equity and venture capital, can sign non-disclosure agreements that allow more strategic and confidential information to be disclosed. This will help alleviate the need for short-run performance and allow management to focus on longer time horizons. I don't think there is such a thing as a company that is too old or a company that is too young to go public. But I do think there are benefits of waiting and building up more abilities and skills, especially around processes and organization. However, company age is also a double-edged sword. A company that waits too long to go public will have to deal with the question of why they waited so long and why they ran the risk of missing the boat. If you're finding this video valuable, please hit the like button now. I had a list of 3 differences, and then I found another one that I really liked, so stick around to the end because I have a bonus for you. The difference. The different target markets. Rivian is focused on the adventurers and outdoor all-weather all-terrain segment. This is easy to spot when you visit their website or follow any of their marketing communication. All the management is pictured with their families in the environment. Conversely, Lordstown is focused on a different group of customers. Lordstown has chosen to go after the fleet vehicle market. This means utility companies and service professionals, such as plumbers and electricians. Lordstown's website shows a distinct focus on the fleet and work segment. The chosen target market is important for many reasons. 2 of those are market potential and competition. For instance, the fleet vehicle market segment is significantly larger than the adventurer segment. That would mean the absolute potential for Lordstown Motors is much greater than for Rivian. However, the second aspect, competition, is also related to market potential. Because the fleet vehicle segment is so large, a lot of manufacturers are targeting the segment. This means Lordstown will experience significant competition. This is probably one of the reasons why Ride wanted to go public and start production so quickly. They wanted the first mover advantage. Rivian is focused on a segment that has less potential and less competition. The bonus difference. Different missions. When you look for the Lordstown Motors mission or missional focus, visitors to the website are confronted with the reality that Ride focuses more on the tactical and practical aspects of electrical vehicle rather than the missional aspect. Function and facts more than visions. Rivian focuses excessively on the mission of making sure the world remains a world worth exploring. This bleeds over into everything they publish, especially around the adventurers they target. I need to make a distinction. I'm not saying missions are all good or companies without missions can't succeed. I am saying companies with missions tend to be the companies that bring about the leaps forward or perish trying. Companies that focus on tactical, not on missional, can still thrive, but don't tend to transcend. I see Rivian and Lordstown as complements, not substitutes. They are not directly competing for the same customer segment. I think a lot of direct comparison from the media and the criticism of Lordstown in the media can be linked to media needing to sell advertising. The fact that both companies are developing pickup trucks and Lordstown going public through a SPAC. The media loves hating SPACs for various reasons. Some of them are warranted and some of them are not. I think the electric vehicle community, and more specifically the electric pickup community, should be embracing both companies and rooting for both to succeed, instead of forming clans and choosing sides. However, that doesn't sell well in the media. If you notice, I haven't commented on the technology and the differences in technology because I'm not qualified. I'm not an engineer, therefore, I will leave that to somebody else to talk about the differences between the technologies of Rivian and Lordstown Motors.